Welcome to the Trading Loop channel. In this video, I'm going to show you a simple and repeatable trading strategy that I personally use, with an 80% win rate when applied with discipline. Wherever you are new to trading or just looking to improve your edge, this breakdown will walk you through each step. Here is what you will learn in this video: how to identify support and resistance zones, how to spot liquidity sweep above or below key levels, and how to confirm when a fair value gap flips into an inverse fair value gap. And finally, how to enter on the retest using clear rules for both long and short setups. Let's dive in. In this example, you can see the price moving up and down, creating a range. This is a classic accumulation phase. First, we identify our support and resistance zones based on the range high and low. Eventually, the price breaks below the support, and that's our key moment. This move signals a potential liquidity sweep, which set up the next phase of our strategy. Now that we identify our liquidity zone, we can see the price break through it. This is our liquidity sweep. Right after the sweep, a bullish fair value gap formed. This is our sign that momentum may be shifting, and we're preparing for a potential reversal. Now, our next confirmation is when price breaks cleanly through the bullish fair value gap, flipping it into an inverse fair value gap. This flip gives us even more confidence that a potential trade is setting up, with the momentum now shifting in our favor. Let's recapitulate. We've swept the liquidity and formed a bullish fair value gap. Price breaks through the fair value gap, flipping it into an inverse fair value gap. At this point, we wait for the price to come back and retest that zone. We don't chase the trade, we let the price return to our level. We place our entry at the fair value gap retest, set our stop loss above the last high, and target take profit at the next liquidity zone below. This gives us a precise, high probability trade with clean risk management. And now, let's take this strategy to a real chart. As you can see, we have a clear liquidity zone above. We are going to wait for the price to take out that liquidity. This is our first key move. Right after the sweep, a new bullish fair value gap form. We don't rush in, instead we wait for the price to break through that fair value gap, which will flip into an inverse fair value gap. Once that happens, we wait for the price to come back and retest our zone. That's where we look to enter the trade, with our stop loss placed above the fair value gap and our take profit set at the next liquidity zone below. Now let's play the chart and see how the market reacts. As you can see, the price come back and retest our entry perfectly, then move directly to our take profit level at the next liquidity zone. Now let's take a look to another example. In this example, we're looking at a short setup, but it turns out to be an invalid trade, and here is why. Price breaks through a bullish fair value gap, but doesn't respect the zone on the retest. That's because liquidity above hasn't been taken yet. The market still needs to sweep that level. So instead of jumping in early, we stay patient and wait for price to take out the liquidity. Once the sweep happens, a new bullish fair value gap forms, and this time we get a clean break through it. That's our confirmation, and that's our inverse fair value gap. Now we are ready to pen our trade. Entry on the retest of the fair value gap, stop loss just above the last high, first target at the next liquidity zone below, second target at the next low. Let's run the chart and see what happened. As you can see, price pulls back to the fair value gap, taps the zone perfectly, and then drops to hit both targets. Now let's take a look to another example. In this example, we are looking at a long entry. First, we wait for the price to break the liquidity below. This gives us our sweep. Then a bearish fair value gap forms, and we wait for the price to break back up through it. Once that happens, the zone flips into an inverse fair value gap. Our entry is on the retest of the E fair value gap with the stop loss below the low and our target set at the liquidity above. Let's play the chart and see how it plays out. As you can see, price came back to the E fair value gap, respected the zone perfectly, and pushed it straight into our target. Clean entry, protected stop loss, and target based on real market structure. This is high probability trading. Now, let's jump to the next trade. In this example, we have a different type of entry. Sometimes the price doesn't come back to retest our inverse fair value gap. In this case, we look for a brick entry instead. Once price breaks cleanly through the bearish fair value gap, we enter the trade immediately, without waiting for a retest. As you can see, price take out the liquidity above, and a bullish fair value gap forms. We wait for the price break back down through that fair value gap, and once the breaks is confirmed, we enter the trade immediately. The stop loss is placed just above the E fair value gap, and our take profit is set at the liquidity zone below. So let's run the chart and see how the price reacts. And as you can see, price drops straight to our target without ever retesting the E fair value gap. It's a perfect example of how momentum sometimes complete the move without a retesting. Let's jump to our final example. In this setup, we are watching two liquidity levels. Before taking the trade, we won't see the market take out both. That's part of our confirmation process. And as you can see, price pushed through both liquidity zone just like we anticipated. Right after that, a bullish fair value gap forms and price break through it, flipping it into another E fair value gap. Like always, we are looking for a retest. That's where we place our entry, with the stop loss just above the last high and our take profit at the next liquidity zone below. Let's play it out and see what happened. As you can see, price come back to our entry, react perfectly to the zone, and go straight to our take profit. Clean setup, precise execution. Before we end the video, here is something important. Make sure you backtest this strategy before using it in the live market. Focus on the time window between 9:30 and 11:30 am. That's when this setup tends to show up most consistently. I recommend you backtest at least 100 trades to really understand how it performs and build confidence in the process. You can use TradingView or TradingZilla for backtesting. I've dropped the links in the description below, including a discount code for both. If you find this helpful, make sure to subscribe to the channel and turn on notification so you don't miss the next setup. And as always, stay focused, stay consistent, and I will see you in the next video.